I'm Sarah Borgson-Keto, and in conjunction with NAREIT's REIT Week 2021 Investor Conference, I'm speaking today with Justin Knight, CEO of Apple Hospitality REIT. Justin, thanks for joining me today.
It's a pleasure. I appreciate the invite.
What do Apple's first quarter results suggest about changes in demand across your markets?
Interestingly, first quarter saw the continuation of some trends that had begun before then. So looking at the latter part of last year, we had begun to see strength in leisure demand, which lifted weekend occupancies across our portfolio. We continued to see that in the first quarter. It was accompanied, and I think something that helped us to be helps us to be more optimistic about results for the remainder of the year by an improvement in business transient as well, which lifted midweek occupancies. Our portfolio has over 230 hotels spread across 88 markets. And from the beginning of the pandemic, we've seen outperformance in our suburban markets. We're pleased in the first quarter, and certainly as we've moved beyond that, to begin to see improvement in our urban markets as well.
How would you describe transaction volume in the hotel sector, and to what extent does Apple expect to get involved?
Transaction volume through the first quarter continued to be relatively light. We have begun to see an increase in transactions with more assets coming to market, and we anticipate that trend will continue as we move through the latter part of this year. We expect to be active participants. We were fortunate to come into the pandemic with a relatively strong balance sheet and have been able to maintain that balance sheet by remaining positive from a cash flow standpoint throughout. That positions us well, and we're excited about the opportunities that we're likely to have over the coming months.
What do you expect in terms of capital improvements this year? Where are they occurring, and to what extent are they prompted by post-COVID safety protocols?
We came into the pandemic with a relatively young, very well-maintained portfolio, and as a result, we're able to make adjustments to our capital spend during the pandemic in order to preserve capital. As we look to the latter part of this year, we anticipate performing major renovations on a number of properties within our portfolios to improve their competitive positioning within their individual markets. Because of the way our assets are designed, we do not have a significant need to invest in new safety protocols related to the COVID virus. And so we're better able to focus our CapEx spend on amenities and services or the ability to provide those services in a way that we think will be very attractive to guests.
Justin, thanks for your time today.
It's always a pleasure.
And for more news and information from REIT Week, be sure to visit NAREIT's website, REIT.com.